Welcome to Talk Tickers. You're tuning in for our deep dive into a pretty significant earnings call from a major player in the energy sector.
That's right. We've gone through the details, pulled out the key numbers and trends.
So you don't have to. Let's get straight into what we found. What's the overall picture?
Well, the first quarter results look pretty strong. Net profits saw a big jump compared to last year.
Okay.
And EBITDA, that also grew substantially. Investment actually hit a record for a single quarter.
A record, wow.
Yeah, and cash flow also looking, quite healthy. A nice increase there too.
Okay, let's unpack that a bit, starting with the profit. Net profit, you said, jumped.
It did. Came in at 2,004 million euros. That's up 26% year over year.
Right.
Now, that's if you exclude some capital gains they had last year from selling off thermal assets.
Yeah.
So kind of a clear comparison.
Gotcha. So apples to apples, a solid 26% increase. What was really fueling that growth?
Mostly, it was really strong performance from their networks business. That division contributed like 52% of the total EBITDA.
Over half, okay.
Yeah, over half. Plus, they got more generation online from new assets, particularly in the U.S., Iberia, and the rest of the world category.
So core infrastructure and new power plants doing the heavy lifting. Were there any weaker spots?
There were. They mentioned a, quote, normalization of margins in the UK.
Normalization,
Yeah, basically margins coming back down from previous highs. And it was particularly noticeable in Iberia. EBITDA in Spain specifically dropped by about 70%.
70%? That's quite a drop.
It is. So definitely some regional variation there. Strength in some areas, normalization or correction in others.
Interesting mix. Okay, let's talk spending. You mentioned record investment.
That's right. A huge 2,720 million euros just in Q1. That's up 14%.
Where's all that money going?
Well, a big chunk, about 2/3 of it, went to the U.S. and the U.K. Both those regions saw investment jump by 30% just in the quarter.
30%, okay. Big focus there.
Definitely. And overall, net investment was up 18%, really driven by the UK side, particularly in transmission and distribution networks.
Sounds like the UK is a major focus area for them.
It really does. And that ties into their renewable spending, too.
Ah, right. How's the investment in renewables looking?
That was up 7% overall. But the real story there is offshore wind. Investment there leaped by 50%.
50, wow.
Yeah, tied to these big projects they're building out, the US, UK, and Germany. They expect those to start operating in 2025 and 2026.
Okay, this UK focus, it seems more than just spending. There was some news about an acquisition integration, wasn't there?
Yes, exactly. They got the final nod from the UK Competition Authority for integrating Electricity Northwest.
Right, the utility they bought.
Correct.
Yeah.
That's now fully consolidated as of March. And it's a big deal, adds about 3.4 billion euros to their asset base.
And what does that mean for earnings?
They expected to chip in around 450 million euros of EBITDA per year.
Pretty significant contribution.
Very. And get this, their total regulated asset base, the REB, in the UK, is now 15.5 billion euros.
15.5 billion.
Yeah, and it's more than doubled in just the last 5 years.
Double in 5 years. So just for listeners, that regulated asset base, the REB, that's basically the value of their pipes and wires that the regulator lets them earn a return on, right?
That's a perfect way to put it. A growing RAA, especially in a stable regulatory place like the UK, generally signals pretty solid, predictable future earnings potential.
Okay, that paints a much clearer picture of that UK strategy. So with all this investment and activity, how's their cash flow holding up?
Holding up well. Cash flow increased by 11% compared to Q1 last year, reached 3.5 billion euros roughly.
Solid increase.
Yeah, and importantly, their financial ratios are still looking good, consistent with their BBB+ credit rating.
So financially stable, generating more cash. And it's striking, as you said, how much the US and UK are driving things now.
Absolutely.
Right.
Almost half of the total EBITDA comes from just those two countries now. And the networks businesses, overall, contribute over 50% of EBITDA. That's up almost 10 points from their average over the last 5 years.
So a real shift towards those perhaps more stable infrastructure earnings.
It certainly looks that way, a strategic shift.
Okay, stepping away from just the financials for a moment. What about operational highlights? Any key developments there?
Yeah, quite a few. They added 2,600 megawatts of new generating capacity over the last 12 months.
That's a lot of power.
It is, and 660 megawatts of that was from offshore wind, those projects we mentioned.
Right.
They also saw increased production in key markets like the US, Iberia, France, Germany, Australia. which helped offset those margin squeezes in the UK and Iberia.
And are they locking in customers for all this new power?
Seems so. They've been busy signing power purchase agreements, PPAs, with what they call Tier 1 customers.
Long-term contracts, basically.
Exactly. Selling power at agreed prices for the long haul. They signed new deals for over 4 terawatt hours per year in the last 12 months.
Bringing the total portfolio to?
Around 40 terawatt hours per year under these kinds of contracts. So that provides a good bit of revenue certainty.
Okay, let's circle back to that record network investment. You mentioned the UK driving it, but can we get a bit more detail?
Sure. So that 1.4 billion euros invested just in Q1, up 18% year on year. It's heavily focused on the US and UK.
Right.
In the UK, they're making progress on the regulatory approval for something called ROT3. That's expected to support a lot more transmission grid build-out between 2026 and 2031.
So planning for future growth there.
Definitely. And they expect a similar trend for the distribution networks too. Plus, they got approval for another 200 million euros investment in their Scottish power distribution areas, which now includes Electricity Northwest.
Okay. And the US network spending.
Net investment there was up 10%. About 241 million euros went into transmission projects.
Which ones mainly?
The big one is the NCC interconnection, linking Massachusetts and Canada. And then nearly 300 million euros went into distribution networks.
Where in distribution?
About 80% of that was focused on projects in New York State.
Got it. And you mentioned Brazil earlier too. Positive news there.
Yes, a new tariff review was approved in Pernambuco. That's expected to add at least 100 million euros to their annual operating profit. Nice boost. And it should increase their energy RAB in Brazil by about 10% each year. Adds up.
Absolutely. So that total regulated asset-based number must be getting pretty large globally.
It is. Reached 49 billion euros across all their regions now.
49 billion. Wow.
And they expect it to top 51 billion euros by the end of this year. The US and UK already make up 60% of that base.
60% just US and UK shows that focus.
Exactly. And it's worth mentioning the Electricity Northwest, that UK acquisition, it just won Utility of the Year from Utility Week magazine. So performing well operationally too.
Good validation for them. Okay, let's dive a bit deeper into the renewable strategy. Investment is up 7%, you said. Where's that focus within renewables?
Right, 1.06 billion euros invested. 2/3 of that, again, UK and US.
Consistent theme.
Very. And within renewables, offshore wind is clearly the priority. Over half the renewables investment went there.
Which projects specifically?
We're talking Vineyard Wind in the US,
Right.
which they expect to be fully up and running by year end.
Okay, that's soon.
Yeah. Then East Anglia 2 and 3 in the UK, and Baltic Eagle and Wind Anchor over in Germany. Big offshore developments.
What about other renewables? Onshore wind? Solar?
Still getting investment, just not as much as offshore. Onshore wind took about 20% of the total, mainly US and UK again.
Right.
And solar PV got 21%. That was more spread out geographically, US, Iberia, continental Europe, Australia. So diversifying their solar footprint a bit.
Now, a big question for any company building stuff right now is supply chains. Any issues there for their renewables build out?
They seem to be managing it relatively well. They highlighted their procurement strategy, focusing on local suppliers, about 80%, and planning purchases well in advance.
And the impact?
They estimate the maximum potential hit from supply chain issues and, global trade stuff is maybe 130 million euros on their investment cost, which sounds like a lot, but it's less than 1% of their total annual capital spend.
So relatively contained, it seems.
That's the message, yeah. Manageable.
Okay, and it sounds like a lot of these big renewable projects are getting closer to the finish line.
That's right. They expect the amount of money tied up in work in progress for renewables to basically halve over the next 2 years, dropping from 8.6 billion euros now to around 4 or 5 billion by the end of 2026.
So projects coming online starting to generate returns.
Exactly. And these new assets are projected to add around 800 million euros to EBITDA each year in both 2025 and 2026.
So 1.6 billion in total additional EBITDA starting from 2027, give or take.
That's the projection, yes. And crucially, they've locked in long-term contracts, those PPAs or things called CFDs, contracts for difference, for the big offshore wind projects.
Giving them price certainty.
Right, more stability for revenue and profit from those massive investments.
Okay, so let's try and pull this all together. Looking at the financials, the operations, the strategy, what's the overall takeaway about their financial health and the outlook?
Well, the clear message is that the focus on regulated networks, particularly in the US and UK, is expected to keep driving growth.
Yeah.
They plan to invest over 13 billion euros just in networks between 2025 and 2026.
Huge commitment there.
Huge. And they noted that 90% of that investment should have a positive impact on returns and cash flow pretty quickly.
Okay.
Their operating performance is strong, cash collection is accelerating. That drove an 11% rise in funds from operation, or FFO, which is a key cash flow metric. Liquidity is also very strong, around 21 billion euros.
And they reaffirmed their guidance for the year.
They did. Mid to high single-digit net profit growth is the baseline guidance, excluding a specific past cost item in the U.S. If you include the positive impact from resolving that, they're actually hinting at potential double-digit net profit growth in 2025.
Double-digit potential. So, quite confident then.
Seems so. They expect continued growth, strengthening financials, networks being the main engine, because that regulated asset base is growing by double digits, hitting over 51 billion. Plus, positive outcomes in those rate cases, like in Brazil.
And what about the energy market itself?
They see energy demand clearly trending upwards everywhere they operate. That should benefit both their power generation and their customer businesses. They'll have 4,000 new megawatts fully operational in 2025 to meet that demand.
Any other tailwinds?
They expect better wind conditions in Northern Europe, especially the UK, which helps wind power output. And they have record high hydro reserves in Iberia, which kind of secures their hydro production for the second half of the year. They've already sold 100% of their expected 2025 production at agreed prices too.
Locking it all in.
Yeah. And they plan to continue rotating assets, selling off some non-core things, presumably. The big picture view they painted is one of accelerating growth in the coming years. Driven by governments focusing on economic growth, infrastructure investment, so especially electricity grids, things like energy independence, security. These are top priorities globally now. And electrification is seen as the main solution.
Right. So they feel well positioned for that future.
That's the argument. They're focused on regulated networks, selective renewable investments with secured supply chains, and that geographical diversification, especially the U.S. and U.K., as growth engines, puts them in a strong spot, they believe.
Okay, makes sense. Right, let's shift gears to our "This is not financial advice" segment. Based on everything we've just discussed, what's an outrageous but plausible trade idea that springs to mind?
All right, well, definitely not financial advice, just throwing ideas around.
Yeah.
But given that incredibly strong stated focus on growing the regulated asset base in the UK.
Yeah, that doubling in 5 years was streaking.
Exactly. And it's a market with a pretty stable regulatory setup, long-term investment needs for the grid, plus that big push into offshore wind with secured contracts. Maybe you could consider this. Think about a long position, perhaps in a curated basket of UK-focused infrastructure funds, or maybe investment trusts. The kind that specifically target regulated utilities and renewable energy infrastructure within the UK.
So piggybacking on their spending and the broader trend.
Kind of. These funds would, in theory, directly benefit from the big capital spending cycles that this company and others like it are driving in the UK network and renewable space.
Interesting angle. Any hedge or counter thought to that?
Well, to make it a bit more of a paired idea, you might consider perhaps a small short position against a broader European utilities ETF, one that holds companies with maybe less exposure to these specific UK growth drivers, or perhaps more exposure to less certain markets or technologies.
So long UK infra focus, short, broader, less focused European utilities.
That's the hypothetical thought pattern. Again, purely for discussion, not a recommendation for anyone to actually trade.
Understood. Always do your own research. Fascinating idea, though, tying directly into that UK ROP story. Okay, that wraps up our deep dive into this energy company's latest earnings call. We've definitely seen a clear strategy emerging focus on networks, especially US and UK, big bets on offshore wind, and a pretty confident outlook.
Lots to digest there. Strong numbers, clear strategic direction.
Absolutely. Remember, this is just our summary and interpretation. The full picture requires your own analysis. Thanks for tuning into Talk Tickers. Join us next time as we unpack another key market event